Hello everyone. Let's just quickly go through question 15 as promised. Remember guys, you need to make sure that you know those formulas. I repeat, know the formulas. Okay. Let's look at question 15.1. It says, list the contents or the elements of statement of comprehensive income. Remember, the statement of comprehensive income, it is the same as the income statement. Sometimes we call it statement of profit or loss and other comprehensive income. It's where we compare our incomes and expenses to check whether we made profit or loss. So when they mention the element, it means you need to know the layout of this particular statement. So you must know, for example, we've got the revenue. Remember, revenue is the same as sales. We less cost of sales. We get gross profit. We add other incomes if we have, and then we can get operating profit, and thereafter we need to check other items like other expenses, etc., etc. So again, please know the layout so that you can be able to know the elements. Now, these are the elements. For example, we have got revenue, cost of sales, gross profit, other incomes, other expenses, interest, etc. You can even have income taxes. You can have, any other items that are part of this statement. So you must just know the statement. Question 15.2. They say identify any three users interested in the ratio analysis and briefly explain their interest. In other words, you must know the reason why we compile these financial statements. We prepare these financial statements because we have got the users to satisfy. Users are those people who are interested in our books. So you can choose any users, but at the same time, you need to tell us why are they interested? What is their own interest? For example, in this case, I chose shareholders. As you can see, shareholders are interested in the business performance because they invested their money. So if shareholders invested their money, they need something in return in the form of what? Dividends. That's why they are interested. For example, we've got creditors. Why are they concerned? Remember, creditors are concerned because we owe them. They need to know more about our financial status so that they can be guaranteed their payment. What about the management? Remember, the management is concerned with the financial aspects of the business. They need to make sure that the business makes profit. Remember, management represents shareholders. So their main aim is to maximize the shareholders' wealth. So they need to make sure that the business operates effectively. So please make sure that you understand this. Now, 15.3, the following are 2015 and 2016 financial years comparative financial statements for Prosperity Breweries Limited, a company that is in beverage industry. So here is then that we are going to deal with what? With the ratios. Now, if you can check, the first statement here is the statement of financial position. And as you can see here, we have got 2 years. So we need to know how to calculate the ratios using this information. Can you see now? So let me just go back. Now we have what? We have got our statement of financial position. This is the same as balance sheet. Okay, so a balance sheet is the same as the statement of financial position. So again, you need to understand its details, because if they say, please list the elements of statement of financial position, it means they want you to name these elements. You see, all these things. You can name everything that is here. Okay, so make sure that you understand. Now, this is the other section for the statement of financial position. As you can see, we've got the total equity, we've got non-current liabilities, we've got the current liabilities. Remember, the total equity and liabilities must be the same as the total assets. Can you see? So the total assets are always the same as total liabilities, like equity and liabilities. So you must understand this layout. And they will also give you the statement of what? Of comprehensive income. Can you see again? These are the elements of what? Of the statement of comprehensive income. You can list any detail that you see here if they ask you to list those elements. So now, after having this information, is then that you can go and check the requirements. Here they say, firstly, we need to calculate the following ratios. Can you see? They're only focusing on 2016. In future, they may also ask you for year 2050. And at the same time, they can ask you to comment on the ratios. In other words, to comment on both years. But for this exercise, we only need 2016. The first ratio, they are asking for return on equity. Remember, the formulas are very much important. What is the formula for return on equity? Is the net profit after tax. Remember, the net profit after tax is the same as the final profit that you have under the statement of comprehensive income. And you must divide it by what? By the total equity. So it is important for us to know how much is the total equity and how much is what? Is the net profit after tax. So we can quickly go and check the statement. Can you see this? Profit for the period is the same as net profit after tax. So I know that for 2016, the net profit after tax is how much? Is 315. So already I know what to put on top. And I must divide this by the equity. What is the total equity here? The total equity is 8,050,000. Can you see now? As long as you know the formula will guide you when it comes to what? To the extraction of information. Now let's go and check our answer. You see, the answer is the net profit after tax divided by the total equity. We multiply by 100 so that the answer is in the form of percentage. Like I said, even if you don't convert to a percentage, we in our normally accept. In other words, it's going to be 0.0391. But please, for this kind of a formula, I prefer it to be in the form of what? Of a percentage. Can you see now? So you just have to know the formula and now you substitute. Now let's look at the second one, time interest and ratio. Remember, this ratio says how many times does our profit cover the interest. Remember, the interest, we're referring to the interest expense. So the formula says the net profit after tax divided by the interest expense. So I must go and look for the, let me go back and look for the net profit after tax. No, not the net profit after tax. We have to look for the profit before interest and tax. So in other words, we must look at this amount. Remember, we need to cover this. We cannot take the net profit after tax because I'm trying to cover the interest. So we say net profit, the profit before interest and tax. Remember, this is the same as the EBIT, the earnings before interest and tax. So we're going to take this amount and we divide by what? By the interest. And now let's go and check the information. Can you see now? The EBIT divided by interest expense. So you just have to go and check any profit that is before interest and you divide by what? 560 and you get 1.8 times. Meaning we cover the interest and at least we've got something left covering the interest. So the more times we have, the better the position of the business. Okay, so if I have got 9 times, it means we cover the interest 9 times. It's good for us. The next one is the total asset turnover. What does the total asset turnover mean? How effective do we use our total assets in order for us to generate what? The revenue. Remember, turnover is the same as the sales. So what we're going to do, we're going to take sales and we divide by the total what? Assets. So let's quickly go back and check the sales. These are the sales. Revenue is the same as the sales. So we're going to take this amount of 18,300,000 and we divide by the total assets. Remember the total assets? These are the total assets. So the formula will always tell you which amount must we use. So this is the total asset that I'm looking for. Okay. So let's go and check our answer. See our answer, sales over total assets. And again, the answer must be in the form of what? Of times. Now we've got what we call the current ratio. Current ratio means how many times do current assets cover current liabilities. In other words, we have to say current assets divided by what? Current liabilities. So now let's go and find the current assets. These are the current assets. Can you see now? We say 3.2 million. Remember, we're focusing on according to the requirements. So we say 3.2 million and we divide by the current liabilities. Why the current liabilities? Here are the current liabilities of 2 million. So now let's go and check our answer. See, current assets divided by the current liabilities, and at least the assets are covering current liabilities, and then we still have something left. So again, we can compare 2 years. So please, as I said, the most important thing is for us to be able to know the formulas. Thank you very much, and I hope this makes sense.